What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to talk about the overall market and break down what's happening so far. I'm going to talk about how on earth the market's being impacted by the news that came out and why the market moved the way it did today, as I actually watched the close live with you guys in this video. But before I do anything like this and talk about some lessons you can learn as a trader from this and some important things, let me just mention a couple of things. I am firstly not a financial planner, so make sure you take none of this as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you are guaranteed up to 12 free stocks. The offer ends very soon, in just about 2 weeks, so check it out before they run out. With that out of the way, let's get on with the video. Anyways, when it comes to the way the market's moving right now, we are seeing the market tanking at the very end of the day. And today's price action was quite crazy. Now, there was actually no news specifically to cause this to happen. This was due to manipulation and also due to what on earth they were trying to do. The market was on the verge of being halted because of the bots. This is what tends to happen. So they flipped the direction of the market in pretty quickly, and then after doing so, they basically tried to fake out as many people as possible with this setup, and then we saw this really big rug pull. Now, what's going on is there's this news still circulating about how Fitch has downgraded the U.S. long-term rating from a triple A all the way down to a double A plus. And on top of this, the market, it's been at these extreme levels of greed. The market is still quite greedy, still at these extreme levels on our like McCullen volume summation indexes and other things like this. So a very healthy pullback. That's completely fine. But the problem was what they did was they let this inverse head and shoulders pattern form on SPY, and they wanted to trick as many investors as possible into believing that the market would just try to keep going, right? So we got this pump, right? We called this pump in the morning. The market would start pushing and pushing. But then I mentioned to all of you that we're going to be watching simultaneously our 200 EMA. And if we managed to break above it, that would have been a more bullish signal for the markets. If we got rejected from it, that would have been our bearish signal. And we ended up rejecting on the 30 minutes time frame at this 200. But what we would have been watching is these levels right here, right? This previous resistance, which becomes support, right? You're going to be watching levels like that carefully. So that would have been your first support to really watch for, this 451 zone. And then below that, we had the 450 flat area around the 50 EMA. And we would have wanted to see this hold and possibly even try to bounce off this. That would have been like a more normal move. But what happened was they continued to let this thing fall, and they smacked us down with a very bearish looking candle on the 30-minute time frame. And after this bearish candle formed, this was just another confirmation to us that more downside would come. Now, I was unavailable during this period. I wasn't able to record any videos or warn anyone about it. But as a trader, I always talk about the different levels, and you always need to be prepared for anything. If any piece of news comes out, and you always need to look at the different levels. So we broke the critical support. I was calling this out. 448 was our critical support of the day. If that had broken, then we would see more downside. And that's what ended up happening. Now, was I here in real time to call that out? Not really, but I did mention this level earlier on, that that's the level to watch for. 448 broke, and then we came down even lower. And now we're currently getting close to filling this gap down here. So you always want to look for gaps and things like that. So if you go back on the chart, there's this gap down here in the 446s. Basically, the market came down to fill this gap way down here. I think we basically filled it's in the very low 446s, so we came very close. And now this, head and shoulders pattern is becoming more valid on the 30 minutes time frame. The market made an attempt to bounce, but it ended up failing. And this was a fake out so that they could drive up more liquidity into their pockets, right? Who was buying in the market? We saw lots of retail. Other people started buying. Even some institutions may have started buying based off the words that were said and based off the earnings. And then what happened was they smacked the market down because they were selling up here. They started selling when all these other individuals were buying, and they smacked the market down. That's all part of their little game. So the market close is going to happen in just a couple of minutes. I'm going to just quickly talk about a couple of tickers too. I mean, looking at Tesla, we made an attempt to break out. We were trying, and the question was, could Tesla break above the 200 EMA? If we broke this, Tesla could have tried to keep going. If we rejected, it would slow down. And the critical support on Tesla was this 258 area. I mentioned to you all, if that broke, then we could see Tesla come all the way down to 255 or so. I'd be watching around there. We actually broke even below 255, which is quite bearish as the market slowed down, bringing Tesla all the way down, getting closer to 252.5, or even down to this low at 251. We also formed a head and shoulders pattern here. This is a head-like pattern. We did get one pop above it, but then we had a left shoulder and a right shoulder, and it looks like it's coming down to this target. We also have this imbalance down here at this 252 area. Did I say 150? I think I meant 250 for Tesla. 252 is what I was talking about. Sorry, guys. That's what we're watching for on Tesla. Now, I also want to mention that, it's still looking weak again, and they're just dragging the market all over the place. If we maintain these low levels, and if we look at the 4-hour time frame, if we look at the 200 EMA, if we continue to remain below the 200 EMA on the 4-hour time frame on Tesla, you're going to be watching this 250 support. Can Tesla try to hold 250 this time? Or do we get a big rejection or break below it? If we break below it, we're going to see the Tesla sink. The market's going to sink lower. If not, if Tesla, retests 250, it could try to bounce. So we'll have to wait and see on that test, probably by next week. But things are looking kind of weak right now, unfortunately. The triple Q is also looking kind of weak. It's continuing to sell off. We're currently at around this 371.5 area. Now, this is actually the low where the support was 2 days ago during the pre-market. So this low is what's acting as support. If this breaks, if we get a break below this level on the triple Q, you're going to be watching this thing test our 200 EMA very, very shortly. If it breaks below 270, 268, 370, sorry guys, 368 is going to come after that. And then if that ends up being the case, that's going to be another bearish signal. So a lot of things are going on right now. This is once again looking relatively weak. If you look at the 4-hour candle, we could see more downside for next week, but we'll also see what happens with the headlines and see if this continues. Now, the odds do favor that. On SPY, by the way, if we continue to break down, right, if we continue to break below 446, we're going to be watching this thing come all the way down to about 443. We have this gap that's unfilled all the way down to actually it's like around 442. So around 442 to 443 is going to likely come if this thing continues sinking. And the odds are now favoring that as we ended up failing and we failed to hold above 448. That's another bearish signal, and we're likely going to see SPY come all the way down to 443 unless we try to make an attempt to bounce above this next week, but it's looking less likely. We want to watch these technicals just to be safe. So what basically happened was on the 4-hour time frame, they were trying to get this bearish cross to switch around to a bullish cross on the MACD, and they ended up failing to do that. It was a fake out, it was a trap, and they caught a lot of people. So things like this happen. What lesson can you learn from trading this? The answer is you want to set a lot of stop losses. Always have a stop loss to save you just in case. And for me personally, in this market, what's been working very well for me is just scalping, getting in and getting out quite fast, securing profits when I'm up quite decently, because the market, has so many support and resistance levels that it could be testing and changing directions around. And you want to keep your targets in mind, but always be open-minded to where things can get rejections. All right. So it's very important to know that. Always know your levels, and then don't forget it's okay to take profits quickly. If, for example, you want to short SPY, right, and you had a target of 448, let's just say you shorted off this rejection from our 50 EMA and it broke down below 452, right? If that's the case and this thing starts tanking and tanking, looks weak, what you could do is you're going to read your technicals and you're going to realize, hey, it's still looking weak. If it's still looking weak, then that's going to be your opportunity to take maybe half your profits or so, and then let the rest of them just ride down and just let them play out. Right, that's one of the strategies that you could use, and then simultaneously you could just watch the charts separately. So now what I'm going to do is I'm going to switch to two screens. I think we have market close coming. We're going to see how this ends up going on the 3 minute time frame. I'm going to keep the 5 minute instead and the 30 minutes on this one. Actually, I'm going to switch it around. I'm going to put the 5 minute here and then the 30 minutes on this side. All right, so the market closes in about 20 seconds, actually. So let's see how this ends up closing. We're currently continuing to drop, looking at 446.25 on SPY. We're continuing to get lower. That was the low right over there, 446.25, 446.27 now. And now we're going to be watching this thing. It's about to close in just about a few seconds. And I think the market just closed right now. So very interesting close. Market came down pretty damn hard at the very end. Pretty crazy stuff. These things happen sometimes. There wasn't really any piece of news that caused this in particular that I saw. It really just happened based off this rejection and then based off technicals, because Apple did get a rug pull too. It actually fell at 185. So that's part of why this happened. Apple was not showing signs of that in the morning. It just happened a little bit later. as we start to see more sellers step in. I think negative news involving Apple could have played a role, but for the most part, I think a lot of this has to do with manipulation. I will talk more about this manipulation maybe in a video for tomorrow, but I want to break down why was there manipulation tomorrow, and then until then, I'm just going to keep it as is. I mean, looking at SPY, things like this happen. We're going to be watching the next level now, and the best thing to always do would be to just watch the chart and let it tell you which direction the market's going to go. When the market had that inverse head and shoulders pattern in the morning, so we can actually look at it right here, it was evidence that the market would try to continue going up, and that's what we ended up seeing in the morning. Got a very nice pump in the morning. And then off this rejection, this is where our 50 and 200 EMAs happen to be on the different time frames. So like the 4 hour, that was like the 50, and then like on the 30-minute, that was the 200. We get this rejection and we start dropping, so we watch the next level. Okay, we have this like previous resistance, which is now support, the 451s, then we had 450. If those fail, then we just will be watching the next levels, right? It's really that simple. You want to watch your MACD simultaneously on the 5-minute, on the 30-minute, and then on the 4 hour time frames, and use those to guide you when making your decisions. You could ride the options down, but always be prepared to secure profits slowly when you reach your target. You could secure half of them in the beginning, then slowly let the rest of them just ride out and do what you have to do. That's probably the best strategy that I would use. Not financial advice, but I'm just making that as clear as possible. I will talk more about why the market's performing the way it is and what piece of manipulation is going on and how I believe this is going to play out moving forward. But anyways, that's what I have for this video. I hope this was fun and a little bit interesting and maybe helpful for a lot of people who are interested in trading. And do what you have to do that's important for your own portfolios. And I will most definitely see you guys in the next one. The market to the moon, as the long term is still incredibly bright despite these short term fluctuations. And peace out.